All right, good morning, guys. I just want to pick up, speak to you about our daily plan, the one that I posted yesterday, in which I um, I talked to you about balance zones, and we talked about some potential targets and some things that we really need to be paying attention to when it comes to following the trade plan. So I'm gonna bring up the plan from yesterday, and I will show you the targets that we have for yesterday. And so here are the targets from yesterday. Uh, so we're gonna put that over here, and this is where the market opened right here. It opened at 91, so it was right below our 41.94 weekly pivot. So just remember that we have a weekly pivot at 41.94. So I'm going to draw a line here to 41.94 so you can see clearly where the market opened. And I talked to you about previous day POC for the volume profile, which is the white line here on the profile. So when I drew this on here, I told you this was a 3 day balance. Okay. And we identified the 3 day balance early in the session. Obviously, before we open, I posted the video, and I told you that the 50% of that was 4202. So 4202 was the 50% of that, which basically coincided with the previous day value area high. So I want you to think about this. The way the market normally moves is value area high. If you get a rejection, it normally looks for POC. POC doesn't hold, then it looks for rotation to a value area low. On the flip side of that, we get value area low. If we get a rejection, we get POC. If we get a rejection, um, it head back down, or it's going to play ping pong between this area until it breaks out. So, knowing this, you need to be nimble and look for opportunities to get into a position that is the most high probability position that you can take during the day is obviously confirmation above the daily pivot, 4200. If we traded above our weekly pivot right here, this zone, if we call out a long from 82 yesterday, and the reasons why I call out a long from weekly from 4182 yesterday, it was because um, the previous day value area low. So when you take a long out of position, in my mind, this is out of position because I'm looking for 74. I'm looking for the response here near the low of the value, the balance zone. I was looking for this here yesterday. We dropped, and immediately after the market opened at the 10 o'clock candle, I used the 10 o'clock entry on a 30-minute candle to get it into a position because I noticed here, this is what we call excess. So the market pushed all the way down to value area low from the previous day, which is right here, this white line. And then this is excess here. So it's excess low, which you can also call it a buying tail. So the price pushed all the way down here. It made a low on that candle to 78, and it bounced back up all the way back to 82. And that candle specifically closed 82. You can see it on the top portion here. This candle closed at 82. When this candle opened, it obviously opened um, 82.25, then you're using the low of this candle here as your stop using the 30-minute candle entry technique. Um, and that's really the way that you should be taking advantage or certain situations, because although we're in between levels here, these notes that I put here from the volume profile, as I draw this every single day, are also important levels to recognize, because you can see here, and I'm going to delete the profile here. You can see here how all these wicks, 1, 2, 3, 4, 5, it took five 30-minute candles here to break this area, to break above this area. So there is a lot of interest, after we broke out of that area. And it came back and retested that area here. This is the area I'm talking about right here. This area here. And you can extend that out. You can see how that resistance in here became support here, right? So you got to be aware of those things, because those are the things that are going to make a big difference in your trade. Um, so another thing I want to highlight, and I know that you guys don't have this, is every time I see this, it gives me an indication that something different is happening. So take a look at this. So this is RTH sessions only. So all of these uh, profiles that you see here, all these candles are only RTH. So look at the volume here. The volume is decreasing, 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 decreasing. Boom, and it got to the low here. So when it got to the low here, the delta is all the way down. But what happened to price here? Disregard this last candle, okay? Because this is the candle that prints from 4:30 to 5 o'clock, and we don't want to pay attention to that. Although I do have a bull sign in there, but I don't want you to pay attention to that. What I want you to worry about or pay attention to is that um, when you see this price coming down here, when you line up this candle here, this candle closed almost, or it hit almost the high of the day. So you can see that in here, delta was here. When it hit the same spot here, delta was all the way down here. So sellers are very, very, very aggressive. However, price is now making a new low. That's when you get a bullish divergence, which is hidden. So look at it this way: price to price here. We get from here, you can say from here to price here. That is an incredible amount of divergence between price and delta. So sellers got very aggressive. They got nowhere in this particular spot. Hence the reasons why you get a bullish hidden divergence. Now, when you open the next day, um, I like paying attention to this, because take a look and see where we open. We open way up here. So automatically during the overnight session, you see that we have a recovery in terms of participation in the market. And the delta is all the way up here at the same level that it was when we were trading at here. But price is down here. So that tells you that it's a level of interest that it wasn't there yesterday and is there today. So those are things that you got to pay attention to. And I know you guys don't have, um, the labels on this particular indicator, but I have shared the indicator for you to just visualize what's happening in the market, right? So when you take a look at these things here, you realize that okay, so we open here, previous day value area low. This is a very limited risk trade, and as you can see, it got here. Yes, we're out of position, but recapturing 87, that's also an opportunity to stay long, or an opportunity to take your position from here. You can use the low of the candle as an end, as your stop. Um, then confirmation that this trade is working is recapturing 94. Then the next confirmation is recapturing 4,200. And then after that, you just follow the targets. And we got to 40, which is a weekly TP2 target. Yesterday, we got to 40, right around here, almost 40, which is the top of the balance zone. And as you can see from here, price retraced all the way back down almost to T1. I was looking for this level to trade, during the drop yesterday, but it didn't. All right, guys. Well, thank you so much. It's 10 minutes long, and I hope you get something out of this.